Good afternoon, everybody. This is Mark, and we're back here for the daily recap. Long day today. That would be the one. That would be the one word I would put into the sentence in the day. It was long. We know it was very captivating with Apple, the product release. They were talking about it, to no end. Everybody was really, I think, riveted to it. Stock traded, very sporadic. I'll put up a shorter time frame just so people can look at it, 13-minute time frame. I mean, back, forth, 665 to, penetrated below 657, which has been the high, the level that it's held last time. And obviously, right at the end of the day, it made a $9 move to almost 670, and it's trading at 671. Back to the daily. It's probably now the bottom is in, at least short term, it seems like, at least temporarily. Everybody was asking me why I wasn't trading it so much today. And the key is, before today, walking in, I didn't have a whole definitive great pattern. It was sitting at its 21-day moving average, which I do like, and it was holding there. But with the announcement, I was just trying to stay away and really wait for an A-plus pattern and trying to find that, and that's the key. When you can't be in everything, you got to be in your best patterns. You got to be in the stuff that gives you the most conviction, and that is the key to trading 101. So today, I put the spider chart up. Closed right at our high. 4 days of just basing right at our highs. Digestion, healthy action. IWMs, much of the same. Qs, not as pretty as IWMs and the spiders, but still, I think, hanging in there, still trading above its 21-day and right at its 10-day, 8-day moving average. So I think that's important and key for us to recognize. You got to trust your conviction, guys. I can go through about 100 charts right now, and they all look good. It feels like we're going higher. We know we have the Fed tomorrow. So there's a few things, just because I keep saying this in my morning call, just because something's not a great long doesn't mean it's an A-plus short, and I think people have to recognize this. Goldman Sachs, grinding higher. I personally really can't get too involved with it at this point in time. I think some resistance is at 120, but doesn't mean it's an A-plus short. And I think people are getting turned around because of that. And I think people have to recognize that across the board. So some standouts today. Obviously, Apple was on everybody's attention, but Facebook. I talked about it yesterday, towards the close, the fact that Zuckerberg was speaking at a conference, spoke well, didn't seem like the boyish kid that he was, and certainly didn't have the nerves that he had before. It helped the stock. It's now trading above its 21-day moving average. I talked about it yesterday because it actually technically was starting to look decent when it started trading above its 8-day moving average. Obviously, got a lift today. I think 21.50, 22 is probably in the cards, and I think longer term you're going to see a 25. Obviously, I'd like to probably get it back to 20.50 before it does that, but it was certainly a trigger long yesterday, an ad today, and you wait and see. It's not going to be something I'm going to be talking about every single day, but it was worth noting. And some of the other social media, even Zanga and Yelp and some of these others actually, again, technically they're getting there. They're crappy stocks, ugly looking charts, but in this market they're waking up a little bit. A few other standouts I think people should be recognizing. I talked about Google, and it basically hit its 21-day moving average, bounced off from there. I think the low is in, 3 days down. I personally like to, at this point, see it hold 685, but I think it's going to resume its back its uptrend. Maybe take some off at 700. That's how I'm looking at these stocks. It's not always fun. It's not always pretty, but you got to trust the moving averages the first time around in this strong tape. And we make no mistake about it, guys. We are in a strong tape. Just to give me an indication, I basically have been getting out of it. CMG is basically filling that gap, beginning that gap, and it looks like you have 350 as a 200-day. It looks like that's the next tag for that stock. So keep it on the radar. I'm not trading at this point anymore. I need a little bit more basing for me to see anything across the board. Some other standouts today. I've been talking about Nike for a few days. It looks good. It's trading above some key moving averages. I have on my chart, I guess, 200 days a little different point. But to me, it looks like you can get to minimum 102, 103, possibly 105. Retailer, we know how that's going. A&F had some news today. Talking to Goldman, that shot up nicely. but a shot up out of a good-looking pattern. I don't mind taking some size on headline news when you know the stock and when you know the industry, and quite frankly, pattern-wise, it's a beautiful pattern in a long base, and obviously you got some good volume attached to it. I wouldn't even be surprised, even if this news doesn't come out, it still hangs and tests 41, 42 in the short term. So just something to keep on the radar. So that's where I'm at. I'm trying not to fight this market. Granted, from a day-to-day point of view, you're getting a lot of ebbs and flows in this tape, and some of the stuff I'm holding. CRM had a decent day today, came back in a little bit, but I think, again, 160 is probably in the cards for the stock. It seems to be the strongest cloud, but VMW is hanging in a decent-looking pattern. Same with CTXS. FFIV is not that good of a pattern, but again, they play catch-up at some point in time also. And Amazon now, I think it's now going to get a few days of rest, catching up to its 8-day moving average. That might be something we look at tomorrow. Google I'm going to be looking at tomorrow. Amazon I'm going to be looking at tomorrow, and certainly Apple, and a few other ancillary plays that I think look good. Stock that I don't really talk about very often, SSYS. I like this type of idea. I have a little bit, bought a little bit. Leading stock, SSYS, it's a mid-cap, touched its 8-day, or what was it, actually 50-day moving average. Been boring, had big volume today. Obviously nice green bar. Looks like it should try to resume its uptrend. So I'm trying to find these type of stocks in order to make sense of this tape and not trying to really catch the momentum back, forth, because I think that's really where it's tricky. Hence why I stayed out of Apple. The majority of the day, I didn't see a great pattern that I wanted to really get involved with. Oil sectors still looks good. OIHs just as an ETF, still hanging in there, grinding higher, not that exciting, but it still looks good. And then, along the way, some oil services, EOG, PXD, still looks healthy. Ags had a decent day today. Rotation. And lastly, home builders. Not exciting to trade, but they had some big days today. Toll Brothers grinding higher. Len grinding higher. Rylan, new highs. They've basically doubled this year, and I think that's important to recognize. They've done it slowly, but that's key. They've done it, and it's important to recognize the housing market certainly seems to have bottom, but these stocks are always a little bit ahead of the curve. It's an industry we've been talking about now for months, and it doesn't matter. Once you recognize it, it's your job to really figure out how to tactically trade these ideas, and that's one of the reasons why we do have the education classes. If you're not taking them, if you haven't taken them, it's important because it's going to certainly save you money, and ideally, you'll be able to make money as time goes on with more execution. So overall, guys, same philosophy I've been talking about. I think we're still in an uptrend. I don't see why that's changing. Technically, nothing's changing. Understanding the ebbs and flows of the tape are going to, shift your opinions around intraday, but on the daily level and weekly level, bigger time frames, stuff still looks good, and I think we go higher. Big Ben talking tomorrow. We'll have to see what happens, but I think much of the same. Hopefully you had a good day. I know if you're as tired as I am, you'll either have a drink or go work out, do something, but be proactive, and I'll talk to you tomorrow.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.